Hello students, welcome to EPG Pathshala. I am Dr. Vishal from Maharaja Agarsen University, Badi, Himachal Pradesh. Today, we are going to talk on module Taxation Benefits to Small Scale Entrepreneurs from the paper Entrepreneurship Development and Project Management. Students, after completing this module, you will be able to understand the taxation benefits to small scale entrepreneurs, have the knowledge about exemption schemes available to SSI units, describe the schemes of SANVET, the benefits available under Income Tax Act, know about the procedure to claim the deductions, and knowledge about the documents required for claiming the concessions. Students, India is a developing country. The importance and the role of small scale enterprises is very significant towards employment generation, poverty eradication, rural development, and creating regional balances in the promotion and growth of various development activities. The government schemes available for the industrial development of the state may be categorized as making available infrastructure at concessional or reduced rates and promoting cash subsidy and incentives which amounts financial gains to the entrepreneur. Particularly, the new industrial policy 1991 has given many incentives, concessions, and relaxation to boost up small scale enterprises. Among such concession, one of the significant concession is that of exemption from excise duty. Taxation benefits available to small scale entrepreneurs. The main benefits available to small scale industrial units can be divided into two parts as shown in the following figure: exemption scheme available to SSI and procedural concession to SSI. Exemption scheme available to SSI. Exemption scheme available to SSI can be divided into two categories, that is exemption scheme 1 and exemption scheme 2. A unit can avail 150 lakh and no SANVAT credits on inputs under exemption 1. It has further to pay normal duty after turnover of 150 lakhs and avail SANVAT on inputs. Under exemption scheme 2, a unit can avail SANVAT credit on inputs on its entire turnover, pay normal duty without any concession. Now we will explain these exemption one by one. Exemption scheme 1. A unit can avail full exemption up to rupees 150 lakhs and pay normal duty thereafter. Such units can avail SANVAT credits on inputs only after reaching a turnover of 150 lakhs in the financial year. This concession is given by notification number 8/2003 dated March 1st, 2003. This notification is popularly known as SSI exemption notification. All industries, irrespective of their investment or the number of employees, are eligible for concession. In fact, even a large industry will be eligible for the concession of its annual turnover is less 4 crores. Second one is Exemption Scheme 2. A unit intending to avail SANVAT credit on inputs on its entire turnover has to pay normal duty without any concession. Now, we will discuss the procedure to obtain Exemption Scheme 2. The first option, that is nil duty up to rupees 150 lakhs and normal duty for subsequent clearance, is automatic. However, if assessee wants to avail second option, he has to take the following steps. Information of choice of option. He must inform its choice of option to the department. Supporting information. He should inform in writing to Assistant Commissioner with a copy to Superintendent of Central Excise the following, that is, name and address of the manufacturer, location of factories, description of specified goods produced, date from which option under the SSI exemption notification has been exercised, and aggregate value of clearances of specified goods till the date of exercising the option. Time for availing the option. The second option is available any time during that year, but the option once availed cannot be withdrawn during the financial year. Now, we can discuss the procedural concession to SSI. Following are some procedural concessions to SSI. We are discussing in brief, but will be discussed in detail later on. These are quarterly return, payment of duty, export procedure for SSI, sending material for job work by exempt SSI unit, exempted small units from registration, visit of officers only with prior approval, and audit. Procedural concession to SSI. Following are some procedural concessions to SSI. Number A, quarterly return. The SSI units availing SSI concession need not submit monthly ER1 return. They have to submit a quarterly ER1 return. Next is payment of duty. SSI units have the option to pay duty quarterly. Next, export procedure for SSI. The SSI units are not covered under excise provisions and have to follow simplified export procedures. Next, sending material for job work by exempt SSI unit. SSI units can send its raw materials or semi-finished material to another unit for job work. Such another unit can carry out job work and return to small enterprise without payment of duty. Further, processing can be done by small enterprises on these inputs and automatically clear its final product without the payment of duty when its total turnover is below 150 lakh. Next, exempted small units from registration. Exempted small units having turnover below 150 lakhs, which are exempt from duty, are also exempted from provisions of registering their units with excise authorities. Next, visit of officers only with prior approval. With the specific permission of Assistant Commissioner, the audit parties, excise inspectors, and preventive parties can visit small scale enterprises and for a specific purpose. The entrepreneurs have to enter relevant particulars in visitor's book obtained by registered person. Audit. Audit of SSI units is done in 2 to 5 years. Even small units may be audited only once in 5 years. Now we will discuss goods not eligible for SSI concessions. Many of the goods manufactured by SSI are eligible for the concession. However, some items are not eligible. Some of the manufacturers are not eligible for SSI exemption, which are not applicable even if these can be manufactured by SSI. And these items are tobacco product, pan masala, matches, watches, automobiles, primary iron and steel, and goods manufactured by an SSI with the brand names of others. The figure shows clubbing of turnover. It shows the cases when the turnover of SSI units are clubbed together for calculating SSI exemption limit. When manufacturer has more than one factory, more than one manufacturer may clear the goods from the one factory, and manufacturer may use the factory for part of the year. Now we will discuss all three cases one by one. Number 1. Manufacturer has more than one factory. If the manufacturer has more than one factory, even at different places, the turnover of all factories belonging to the same manufacturer have to be clubbed together for calculating the SSI exemption limit of 150 or 400 lakhs. Next, more than one manufacturer may clear the goods from the one factory. It is also possible that more than one manufacturer may clear the goods from the same factory. For example, part of factory may be used by one manufacturer and another part of same factory may be used by any other manufacturer. In such cases, all clearances from the factory have to be considered even if the clearance is of different manufacturers for calculating the SSI exemption limits of 150 or 400 lakhs. Next case is manufacturer may use the factory for part of the year. Sometimes a manufacturer may use the factory for one part of the year and then another manufacturer may use the same factory for remaining part of the year. In such cases, the turnover of different manufacturers has to be clubbed for calculating the SSI exemption limits or of 150 or 400 lakhs if it is from the same factory. Our next topic is no clubbing of units belonging to government, khadi and village commission, etc. There are different situations and we are discussing these situations one by one. Situation 1. When manufacturer has more than one factory. So clubbing is required for calculating the SSI exemption limit of 150 or 400 lakhs if it is from the same factory. Situation 2. More than one manufacturer may clear the goods from one factory, where clubbing is required for calculating the SSI exemption limit of 150 or 400 lakhs if it is from the same factory. Situation 3. Manufacturer may use the factory for part of the year. Clubbing is required for calculating the SSI exemption limit or 150 or 400 lakhs if it is from the same factory. Situation 4. Units belonging to the government, khadi and village commission, etc. So in this case, no clubbing is required. Let's talk about branded goods and SSI. Branded name or trade name means any name or mark such as symbol, monogram, label, signature, or any invented word or writing which is used in relation to the goods for the purpose of indicating or so as to indicate a connection between such goods and some person using such name or mark. There are some provisions related to brand name under SSI exemption scheme. The first one is goods bearing own brand name of SSI units. If the small enterprise manufacture goods under his own brand name, SSI exemption is available to such type of SSI unit. And goods bearing brand name of others. If the manufactured goods bear brand name of any other person, then there can be of two type of situations. The first situation may be goods bearing brand name of others not eligible for exemption, and the second may be goods bearing brand name of others but eligible for exemption. If the manufactured goods bring brand name of any other person, SSI exemption is not available. As some large units get their goods manufactured from small units under their brand name or trademark, as we are very much familiar with this practice nowadays. And number 2, generally goods bearing brand name of others not eligible for exemption, but there are some exceptions, and in the following cases the goods even bearing the brand name or trade name of others will be eligible for SSI exemption. The figure shows the benefits which will be offered to the SSI units under Income Tax Act 1961, and these are deduction under Section 80J, rehabilitation allowance, expenditure on scientific research, depreciation, and investment allowance. Let's discuss now some of the benefits under Income Tax Act for the entrepreneurs or new startups. Income tax benefit under Section 80J. Income Tax Act 1961 under Section 80J, new industrial undertakings including small scale industries are exempted from the payment of income tax on their profits, which is subject to a maximum of 6% per annum if they are on their capital employed. The exemption in tax payment is allowed for the period of 5 years from the date of commencement of production, and in order to avail this exemption facility, a small scale industry has to satisfy the following conditions. Number 1, The unit should not have been formed by the reconstitution or splitting of an existing unit. And the second one is the unit should employ 10 or more workers in a manufacturing process with power, or at least 20 workers without power. Now, rehabilitation allowance. According to Section 33B of Income Tax Act 1961, the rehabilitation allowance is allowed to small-scale industrial units and the manufacturing small enterprises. The rehabilitation allowance is given to only those small businesses that had suffered because of the following reasons, that is, action taken in combating an enemy or action by an enemy, cyclone, flood, earthquake, or other natural upheavals, civil disturbance or riots, explosion, or accidents, fire. The rehabilitation allowance should be utilized within 3 years of the unit's re-establishment, reconstruction of revival for the business purposes only. This allowance is allowed to the industrial undertaking equal to 60% of the amount of the deduction allowable to the enterprise. Next is expenditure on scientific research. Following deductions in respect of expenditure on scientific research are allowed under Section 35 of the Income Tax Act 1961. The capital expenditure, except land, incurred on scientific research must be related to the business of the assessee, but it is subjected to the provision of Section 35 subsection 2 of the Income Tax Act 1961. The revenue expenditure must be incurred on scientific research related to the business of the assessee in the current previous year. The sum that it pays to a scientific research association or a university, college, institutions, or to a public company which must have its objective of scientific research. Expenditure on scientific research can broadly be classified into two categories, that is, research carried on by assessee and research carried on by outsiders. The research carried on by assessee is of three types, that is, revenue expenditure, capital expenditure, and expenditure on in-house research. Research carried on by outsiders is also to be discussed in the three categories, that is, approved research association, university, etc., contribution to national laboratory, and contribution to Indian company. Expenses on research activities carried on by the assessee himself. When the assessee carries on research in his own premises, he has to incur various types of expenses. Such expenses can further be divided into two parts, that is, revenue expenditure incurred by assessee himself and capital expenditure incurred by assessee himself. In first case, when an assessee sets up a research laboratory of his own to carry on research which may be helpful in his business, he has to incur various types of revenue expenses, and all such expenses incurred by the assessee are allowed as deduction. Such expenses are usually on the purchase of raw material required for research, salary, etc., given to workers engaged in research, and such other expenses which are incidental to research activities related to assessee's business. In case assessee is engaged in a business of textiles, so research expenses related to textiles business only are allowed. In the next case, any capital expenditure incurred within 3 years immediately preceding the commencement of business shall be deemed to have been incurred in the previous year in which business is concerned. Expenditure in in-house research. Under this category, Section 35, subsection 2AB provides a weighted deduction at the rate of 200% of the expenditure incurred on in-house research and development shall be allowed as under. The deduction is allowed only to company assessee. Deduction is allowed to a company engaged in biotechnology or in any business of manufacture specified in 11th Schedule of Income Tax Act. Expenditure should be on in-house research. Deduction is not allowed for expenditure in the nature of cost of any land and building. Next is contribution to approved institutions. Under this category, the first one is research carried on by any other agency, body, university, college, etc., and financed by the assessee. A weighted deduction at the rate of 175% of actual expenditure shall be allowed if the amount is given for research to an approved association, the objective of which is to undertake research in the field of social sciences or statistical research. Next is contribution to national laboratory. A higher weighted deduction at the rate of 200% of actual amount given shall be allowed if the amount is given to an approved institution for undertaking scientific research program approved by the prescribed authority. Weighted deduction for a sum of money given to a company for scientific research. In case any assessee provides money to an Indian company engaged in the scientific research and approved for this purpose, a weighted deduction at the rate of 125% of the amount shall be allowed. The research carried on by the company may or may not be related to donor assessee's business. Let's discuss now the provisions relating to depreciation. A small-scale industrial unit is entitled to a deduction on depreciation on block of asset at the rates which are given under Section 32 of the Income Tax Act 1961. Depreciation deduction from the actual cost of plant and machinery is allowed subject to a maximum of rupees 20 lakh in case of the small scale industry. Diminishing balance method is used to calculate the amount of depreciation. In case of an asset acquired before the accounting period, the depreciation is calculated on its written down value called as WDV. An additional allowance called as extra shift allowance is available for the plant and machinery that is used in the manufacturing in double or triple shift. A small scale industry should fulfill the various conditions before it becomes eligible for claiming the deduction in depreciation. This deduction of depreciation is allowed only on fixed assets like building, machinery, plant and furniture, etc. Capital asset other than these shall not be eligible for the deduction of depreciation. The asset must be used actually in the business or profession of assessee in the previous year. But in case the plant and machinery etc. is kept as standby to be used, in case of emergency or breakdown, depreciation in such asset is allowed. The asset must be owned by the assessee. Owner is that person who can exercise the rights of owner on his own behalf, and he is entitled to income from such asset. Assessee cannot claim any depreciation unless he is the owner, although he might be using it. The income tax officer must be satisfied with all the prescribed particulars as required under Section 34, subsection 1 of the Income Tax Act 1961. Depreciation is charged on the block of asset comprising tangible assets being building, machinery or plant, and the intangible assets being know-how, patents, copyrights, trademarks, licenses, etc. The deduction of depreciation will not be allowed on assets which are sold during the year. The loss suffered due to the sale of asset, however, will be considered under short-term capital gain. Investment allowance. In 1976, the investment allowance was introduced in order to replace the initial depreciation allowance. This allowance is allowed at the rate of 15% of the cost of acquisition of new plant or machinery installed as per Section 31A of the Income Tax Act 1961. Actually, the investment allowance has been made available for the things or the articles except certain items of low priority initially, but according to the 11th schedule of the Income Tax Act 1961, a special dispensation a special dispensation has been provided for the plant and machinery installed in small scale industries. The important condition for the claiming the investment allowance that the small scale industrial unit has put to use machinery or plant either in the immediate following year or in the year of installation, following which the benefit will be forfeited. The rules for claiming the deduction of investment allowance by an entrepreneur are: eligible assessee, a company engaged in the business of manufacture of an article or thing. B. The investment must be made in new assets as defined in Section 32AC subsection 1. The new asset excludes computers, vehicles, ships, aircrafts, office appliances, and other specified assets. The amount of investment during any previous year must be more than Rs 25 crores. The above investment must be made during the period beginning from 1st April 2014 and ending on 31st March 2017. In other words, new eligible asset must be acquired and installed during the period from 1st April 2014 to 31st March 2017. The newly acquired asset must not be transferred within a period of 5 years from the date of its installation. 15% of the actual cost of asset acquired and installed during any of specified financial years is allowed. The reduction is available for 3 years, that is 2015-16 to 2017-18. Hence, no deduction shall be available with effect from assessment year 2018 and 19. So students, let's see what we have learned from this module. India is a developing country. The importance and role of small scale enterprises is very significant towards employment generation, poverty eradication, rural development, and creating regional balance in the promotion and growth of various development activities. There is no definition of small scale industrial unit is provided under central excise law. Some concessions or benefits are given by central government through notification, which is notification number is 8/2003, and based on this, small scale industrial unit is a unit whose turnover during immediately preceding financial year was 4 crore or less. Benefits available to SSI units can be divided into two parts, that is, exemption schemes available to SSIs and procedural concession to SSIs.